JRG Securities has also joined in to take us through the opening bell. Morning, Anand. Good to see you in. You must have been overhearing the discourse. The fundamental analysts still seem to believe that around here, 5200, there could be some support. But the technical guys seem to be talking more and more about that 4800 breakdown. Which do you think is a higher probability event?
Well, right now I would think the technicals are probably the way I would vote. We've been arguing that there should be, for you to really go out and buy, you have to have something at that level for the index, to be interesting in the market. And anything higher than that requires that the overall global situation as well as the domestic market earnings growth and so on is also attractive, which it is not. So if you have a market which has no reason to go up, then the chances are it will fall.
You wouldn't take too much heart from what happened with the IEA and the fall in crude overnight?
Well, the fall in crude was more a reaction to what the US government has done, which is to dip into their emergency reserve and sell, I think, 60 million barrels. Actually, you could look at it both ways. One is that it has fallen because they have sold, and therefore it will continue to be somewhat soft because of the market action. On the other hand, one could argue that you have to dip into your emergency reserves only because you don't see it falling on its own natural steam, and we haven't seen the rest of the oil-producing countries actually get in and increase the production. So that leads you to believe that perhaps they can't. That is not very good for longer-term equities, actually.
Today, hopefully, what are you expecting to hear on oil?
Well, hopefully nothing. But if the newspaper reports are to be believed, there will be a rise in prices. I think finally there is some debate now on the fact that it is not a subsidized sector; it is an overtaxed sector, and there is no great thing that the government is doing in terms of subsidizing the consumer. It is just not able to control its own expenses, and therefore it is overtaxing the sector. And really speaking, the finance ministry should give up some of its usurious taxes and instead shift to more level tax level, which will automatically reduce the pressure on the oil companies. That said, near term, obviously the oil companies should benefit both from the possibility of an increase in price as well as what we just said in terms of the US action, which is depressing the crude for the near term.
So you think some duty cuts will come, and if there are some price increases at the retail level, would the market frown about inflation, or do you think that's expected and in the price?
It is. See, inflation has become a worry finally, and therefore I would imagine that will be an area of some concern. For those who are more bullish on the oil refining companies, however, I think it remains a trading bet, because all said and done, you don't know how much the government will actually let them make money. At best, they are going to allow them to not bleed. So there's not that much upside from the point of view of an increase in price vis-a-vis the stock market. There can be a downside from the inflationary aspect of it.
What's going on with the mid-caps, Anand, again? I mean, so many stocks have seen individual blowouts on concerns of promoter margin funding, pledging, etc. How have you read all of this?
Well, there are obviously issues with mid-caps and whenever there is any liquidity tightening, and we've mentioned this several times in the past. The thing is that unfortunately there are lots of people in this country who find innovative ways of going around whatever the rules are. So the promoter pledging, for example, doesn't necessarily reflect the true pledge situation. We have seen issues where promoters have gone and bought back or transferred from one company to the other. We've seen cases where there is an implicit right to sell but not exactly a pledge. So it's, you are trading the fine line there, but illegally perhaps it's not really a pledge thing. So you shouldn't go too far, you shouldn't read too much in terms of what is the pledged amount. There can be random movements in companies where there is some liquidity problems with the promoter, and that's something that the market has to watch out for on its own.
So for now, do you say we trade around with limited upside for the market, or is there any potential for surprise either from crude cooling down or some policy action? I mean, or is it a very low probability outcome in your book?
Well, then I think the cool down, like I said, to me seems to be a temporary thing. It is not something where we've seen an increase in the production from the oil-producing countries. And until that happens, I don't think that you're likely to see a uptick there. The one factor that could increase the possibility of an upside on the market could be a commodity cool-off in a general sense. Now, the Chinese figures have shown that there has been a slowdown there as well, and copper therefore has started to show a little bit of weakness. But really speaking, if you find that the dollar continues to remain weak because of the own internal issues within the US, as well as the fact that there isn't that much that you can do in Euroland, you will eventually get around to a higher commodity price. Higher commodity prices will affect only a small segment of the Indian market, but overall the pressure on the margins will continue to be fairly high. So the one joker in the pack, lower commodity prices across the board, will definitely lead to a margin increase and the market going up, but to my mind that doesn't seem to be a very highly likely event.